Hi, and welcome to this week's look at the major stories impacting the market. And we're actually going to start with the currency, and that's the Australian dollar versus the US dollar. Now, we had the Australian inflation report out earlier this week that showed in the first quarter it fell from a 33-year high. CPI, Consumer Price Index, was 1.4% for that first quarter. Now, expectations were for 1.3%, but the previous quarter was 1.9%, so mildly in line. The next Reserve Bank of Australia meeting is on May the 2nd, and the focus is clearly on that in terms of the Aussie dollar at the moment from almost all market participants. If we look at it year on year, not so great. CPI rose to 7% on the year versus the 6.8%, which was expected. Now, that is still down slightly from the previous year on year figure, which was 7.8%. Now, what's going to happen in terms of interest rates? Well, most people are now expecting an increase in the interest rate at that next meeting. That was after a pause in rises for April because the Reserve Bank of Australia wanted to assess the impact of the previous rate rises over a slightly longer period. What was the reaction to the news? Well, we broke through the low of April. The daily chart shows perhaps some market weakness there because mainly that important support level, mark 1 on the chart, which has been there since autumn 2022, was breached. Also, the rebounds were weak. It did come off of the lows of the day, but they didn't even really reach the median line, which we can see as 2 on the chart. And if we look at the 200-day moving average, that's also indicating perhaps some further weakness there. Spot 6625 still seems to be the key level moving forward, so keep your eye on that. And obviously, not long to wait now until that Reserve Bank of Australia meeting on May the 2nd. Okay, secondly, we're going to head across the pond to America, and we're going to start looking at some individual stocks for the next couple of videos, in fact. Obviously, reporting season pretty much in full flow, and we know the impact tech stocks have been having over the last 18 months, 2 years, plenty of volatility around. But Microsoft this week was up 9% in aftermarket. So Tuesday, after the market, Microsoft reported their latest set of figures, and it was taken pretty well. Aftermarket price of Microsoft, the share price reached $300 per share. But why was that? Well, revenue was up 7% to $52.9 billion US dollars against a forecast of 51 billion, so exceeded expectations. Net income was up 9% to 18.3 billion US dollars, again an expectation of 16.6, so again, well and truly above that. They were talking about really strong growth in the revenue of the cloud division over the last sort of 12 months or so. Revenue there of 28.5 billion US dollars. That's actually an increase of 22% year on year. So you can see why people were taking that very, very positively. The CEO obviously talked through the figures, and something that came out and I think was very well received was AI-related spending and investment is definitely going to increase in the coming weeks, months, years. And AI really is now beginning to have an impact across the markets. We looked at a Wall Street Journal poll of 45 analysts from Wall Street. Only one was indicating that Microsoft was a sell. Now, that is just a poll in a newspaper. Don't take that, to heart. Do your own research. It's possible the price may consolidate near that psychological level of $300. In fact, pre-market today, we're looking around $295, $296. That psychological level, which we can see as 2 on the chart, and the upper limit of the ascending channel, number 1 on the chart, that may lead to a correction in the middle of that current channel. But certainly some real positivity for Microsoft off the back of those results, and other results coming out seemingly quite positive for these big tech stocks. As I say, pre-market, we're looking around $295, $296, but I think, Microsoft, others that we're going to come on to in a moment, some real positive news for them for the first time in a while. Volatility will abound, that's for sure, in those tech sectors, so don't forget your risk management techniques. Right, we're going to stick with tech equities at the moment, and not only did Microsoft obviously do pretty well after the market, after their results, but Meta, the owner of Facebook, was up 11% after its own strong report. Now, this was the aftermarket on Wednesday that the report was published, and it's fair to say again, it beat expectations. Revenue was $28.7 billion US. That's up 2.6% year on year and a new record. And during the talk, their CEO was predicting second quarter range of 29.5 to 32 billion US dollars, which obviously would be a record also. Earnings per share, $2.20 per share, against an expectation of $2.01. And interestingly, the share of daily active network users were up 4% year on year. Something they've struggled with historically when it's come to results, but clearly a positive for them this year. Morgan Stanley analysts suggesting that the AI-driven improvements that Meta are looking to bring in alongside many other companies, and this is where the importance of AI is starting to be seen quite heavily, could lead to more sustainable multi-year revenue growth for Meta. Again, pretty positive statement. Analysts and investors alike also looking at the staff reduction of 10,000 people and viewing that very much as a positive in the previous few months. Now, pre-market today, we're probably looking around the 235 level share, which is a great level for this. Chart does show a couple of important resistance levels. One, we're looking at $245 a share, which has previously had an impact on dampening down a share price growth. And secondly, number two, 50% level of decline from the historical highs to the November 2022 lows. So this was a couple of days of very good, strong, above expectation, major tech results. Will that continue through the coming earnings season? Nobody be quite sure. So do be prepared for volatility, as I've mentioned. But certainly, Meta, Microsoft, having a pretty good week. Okay, finally for this week, and again, not wanting to sound boring, but sticking with US equities. And we're moving from software, I know that's a little bit of a leap of faith in terms of Facebook, to hardware. And unfortunately, early this week, NVIDIA hitting month lows. Now, the 90s and the early 2000s were halcyon days for hardware producers, manufacturers. Every office, desktops, servers, miles upon miles of cabling. But obviously times have changed. And, most people these days are on laptops, cloud-based systems, massive server rooms in offices disappeared. But one manufacturer has managed to stay at the top in terms of cap value, and that's NVIDIA. They've been specialists, particularly in graphics cards, over the past few years. It's been their staple and has kept them near the top, due mainly, believe it or not, to cryptocurrency mining. Now, cryptocurrency mining uses huge amounts of electricity and huge amounts of graphics and processing power. And in fact, to keep it productive, you need high-powered quality GPU units to perform the resource-heavy calculations. So that was a big boon for NVIDIA because, could really be regarded as the kings in that sort of market space. But over the last couple of years, or few years, private mining has been dying. That is duly down to the fact that there is a huge cost and a huge demand for electricity and energy consumption when you are mining. Of course, we're all aware that energy costs have increased significantly. So that was a bit of a slump for them. Then we saw a situation over in China, which had some massive, huge mining rig setups. But back in 2021, the Chinese government clamped down on them significantly, which led to a bit of a flood in the market of second-hand components. That, during with private miners sort of ceasing operations, really did have a bit of impact for NVIDIA. Now, things improved from 2022. Many of these big mining setups moved to other regions, where, believe it or not, electricity is still quite cheap, or in some cases even free if you were mining, such as Armenia, Kazakhstan and Venezuela. So demand once again picked up. And let's not forget, they do have the market share when it comes to serious PC gamers, desktop gamers at home who want to use these specialised graphics cards they produced. But is it a long-term solution? Well, the last month or so, after a relatively strong start to 2023, we've seen the value of their shares decrease slightly. And in fact, we had a sudden slide on Tuesday during the main market hours where it was down almost 3%. Figures that came out in January weren't great in terms of overall earnings, not great compared to that time last year. So has the positivity ended? Well, yes, but it's worth noting that after market on Tuesday, it managed to recover a lot of its losses from earlier in the day. And it's fair to say, I think the Microsoft results that we've already spoken about and their talk about AI, and in fact NVIDIA's own desires to get involved in the AI space and them, talking about it quite a lot, certainly had a bit of a positive impact after a poor day. But I think NVIDIA, as a large market cap stock, is going to be a very interesting time. Their core business, not the most buoyant of markets these days. So could it be AI to the rescue here as well? Obviously a lot of tech news for us today. Be interesting to see, with earnings continuing to come out over the next couple of weeks, what's going to happen to the Nasdaq, for example, off the back of it. But as ever, these tech stocks can be volatile. So be careful, make your own trading decisions, and we wish you luck for the week ahead.